Welcome back to Crypto Rolly, the crypto watch that never stops. Live technical analysis, price predictions, and trading. Welcome, welcome, welcome. Took a couple days off, came back with new hair. All right, so I want to do a quick update today. Get this video out very quickly because we do have a weekly candle close coming in a few hours. We also have the CME opening back up today. So I just wanted to do a quick breakdown of the Bitcoin chart. Take a look at our indicators, the usual good stuff, all right? These are my own ideas and opinions on the market, so please do your own research, trade at your own risk. I am not your financial advisor. Hit that like, comment, subscribe, tick the bell for notifications. Let's roll. All right, looking at the market, we can see Bitcoin slightly down on the day. Everything slightly in the red. Yesterday, though, we were slightly up, had a little bit of a pump, and now a little bit of a retracement. Okay, real volume, 600 million. This is typical of the weekend, under a billion, really slow. No major moves, no real continuation. So like yesterday, we did have a little bit of a $100 pump, and then it's just slowly falling back down. All right, typical of the weekend, but we have lots of great stuff to look forward to this week. I'm sure we do. Are we going to 8K or are we going to 6K? Will this be the week that we actually see some action? We will see. We will see. All right. So the crypto fear and greed index was at a 16. We've been just in this level for over a month now, waiting on, that spike up into more greedy territory. If we do get a pump to 8K or higher, you're going to see this rise, but we have just been chilling right in this area for this entire pandemic, but rightfully so. People are fearful. Okay, block halving, 22 days away. It's just getting closer and closer and closer. I don't expect, there to be like a rocket ship pump before the halving. Generally, you would see a bit of a sell-off before the halving. But considering we did have, that Black Swan event, Black Thursday, whatever you want to call it, the huge sell-off, that could have just changed things up, and it's not going to be your typical halving scenario. So, but we are keeping our eyes on this. Typically, after the halving, you do see that gradual increase in price. So, around the halving in the past has been a good time to do some accumulation. If you're dollar cost averaging, buying on spot, this has been a good time for that, okay? Let's look at the charts real quick. We can see prices at 7,140. We do have the CME gap opening back up today. It closed around 7,080 right there, and if we compare that to the Bitcoin price, that's somewhere right around here. So just a tiny gap, nothing too crazy. What we could see happen, if we're going to be bullish this week, you could see a quick dump down to fill the gap and a wick back up, so it could drop, fill it, and bounce. Okay, that's one scenario. Or maybe we just drop down and continue our way further to the downside. So, we still have a high and a lower high here. We did break out of this little channel. We can go over to the BitMEX chart. You can see that more clear. I have it with my drawing tools. So you can see we were in this rising channel. We broke down. We were in a falling channel. We broke up, but we haven't got any continuation, and you have a high and a lower high. So if you continue down this way, that could be putting in a downtrend. Now, if I want to be talking about 7,700, 7,800, 8K, what I really want to see is a minimum of a 4-hour close above 7,400. So I need a 4-hour candle minimum to close above 7,400, so that we can get that higher high trajectory. Because, if you zoom out, you can see that we have been putting in higher lows. Low, you have a higher low, a higher low. We just need to put in a higher high, okay? So let's just take a look at our indicators. We'll go to the weekly chart and do the usual breakdown. Like I said, I'm going to make this one a quick one for you guys just to catch up on everything. So let's go to the weekly. We do have the weekly candle close today. And, right from the bat, looking at our moving averages, we still haven't been able to close above this red 100 EMA. The red 100 EMA has been around 7,300. It's now down to 7,289. And just we haven't been able to get that close above. And you actually have the blue 10 simple coming down. This is, a bearish cross. It's not a death cross, but to have the lower time frame moving average crossing beneath the higher time frame is a bearish cross. And you had that happen here with the yellow 21. And on the next weekly candle, it could cross beneath the red. So this blue is at 74.28. The red 100 EMA 72.89. It might not, but they're pretty close. So we'll follow up with that, later today, tomorrow's video, and we'll keep our eye on that because we did want to see us, break above this. You had previous support, flipped resistance, and we're still struggling at the same point. So if we did, get a pullback, and we've been talking about a potential pullback, since this weekly candle, this one, and it just keeps pushing up higher. But just to keep things in mind, you would be potentially coming back down to retest the 200 EMA at 5,900. Your pink 200 simples at 5,650. So that would be, if we do get a pullback, maybe a target down there. I'm not totally worried about testing this level until, we see what happens if we come down to this level. Okay, so if 6,000 holds, you don't have to worry about 3,000. If you start losing these levels, we can start talking about lower. But until then, we'll just keep looking at it level by level. And very similar, you have this blue conversion line at 71.75 that just we haven't been able to close above either. So we couldn't close above 7,300, and we haven't been able to close above 71.75. Price 71.30. Will we get that today? Possibly. So that's why I wanted to put this video out. From time of recording right now, you still have about 4.5 hours by the time it uploads, processes, and you watch it, maybe just a few hours. But you want to keep your eye on that level. Does that mean if we close above this, we're going to just pump immediately? No, but one step at a time. This would be something bullish to talk about at least. And also what I think is standing out the most to me is this has been hinting a cross up on the weekly Stoke for a while, and we could possibly get a confirmed cross. So we'll also watch that. So this is interesting to see. So you do have this crossing up, and potentially we'll confirm it with this weekly candle close. Our Bollinger Bands, anything interesting there? We do have the middle BB resistance at 7,800. So that's also why we've been targeting that region 77, 7,800 as a possible top. So that would be your resistance if you do get a nice little pump to the upside. All right, going down to the daily. On the daily, we're still in this bullish zone. You can see that the Bollinger Bands are getting tight. And when they start to squeeze together, that's when you start to see a larger move happen. Your middle BB support is at 69.50. Your upper resistance is at 74.59 using the Bollinger Bands. Your Stokes have crossed up, so that's good to see. Nothing, it's not like coming up aggressive like that, but you do have that cross up, and the weekly has a potential cross up. These things could add up possibly. And let's look at maybe our other indicators real quick on the daily. The Ichimoku, your Ichimoku, we did close this daily above 71.75. This is above the daily Ichimoku cloud, lining up with that weekly blue conversion line, dipping back beneath. But we do want to find support above here, at least on the daily and hopefully the weekly if you're bullish. I can see that the blue conversion line being beneath the yellow baseline is bearish, but they're starting to converge. So if you get a blue cross above the yellow, on the daily will be a bullish Kumo cross. So, like one step at a time. So possibly you get that bullish Kumo cross, you find support above 71.75, that could give us, momentum to push to that 77, 7800. And that level's lining up with this cluster of price action here as well, okay? Bollinger Bands we did. Moving averages, your moving averages, we were able to finally break above this is the 50 simple, this dark blue 50 simple. We did finally break that. You saw resistance. We closed above it, used it as support, retested it, bounced off as support, and then we got back above the orange 50 EMA back beneath it. So, the volatility has been really low. It's been, pretty choppy the past, few weeks, really. So we're kind of just waiting for a breakout of this range right here. I would say between right, maybe 6,800 to 7,400. That would be the larger range. And then, go down to lower time frames. You have smaller ranges in between. So we really need, are we going to break out to the upside or the downside? Right now, this is just really choppy, hard to trade. So we'll see. Let's see. So I would say, though, if you do get a test to the upside, the 100 EMAs at 75.84, that could be a pit stop for you. And then you have this cluster up here in the 7,800, 7,900 region. Going down to the 12-hour, on the 12-hour, you're bouncing off this blue 10 simple and the yellow 21 EMA. They could rise, providing some more support, and your target would be this green 200 EMA at 75.82. Your stochastics, though, on the 12-hour have gone high and potential cross down from the top. Looking at 71.27, that could be, like I say, we have that little bit of a gap down below, and could see a short-term pullback looking at a 12-hour Stokes, okay? But with this choppy sideways action, we've noticed, the 12-hour Stoke will be crossed up and the daily crossed down and the 4-hour crossed down, like all opposites. So it's been hard to read. It's best when they kind of all line up. So we did see the weekly and the daily looking to cross up, but now the 12-hour is coming down. That's why it's been tricky with this sideways action, okay? The Bollinger Bands, we are in the bullish zone, and you did hit your resistance level here. It was at 7,300, lining up with some of our other indicators, 7,300, 7,400. You're going to need some volume to really break out of that. And you can see the volume is still decreasing. We did have a nice spike in volume right here with that pump there. But overall, looking when you zoom out, it's still decreasing volume, which means we haven't really picked a direction. Once you see that volume really increase is when there's momentum going in that direction. You could see it's easier to look at maybe a daily. There's some good examples of that. Back here, we were consolidating. You had falling volume, and then finally with this breakout, you saw a large increase in volume there, and the volume was pretty steady, picking up, and then you had a nice decrease again. And generally that is how it works. Back here you were in this very, very choppy range, and then finally breakout volume, and you saw continuation. So the breakout volume will give you continuation, okay, not just like a spike up, sideways, and then spike down, okay? So that's what we're looking for as far as the volume goes. Continuing with the 12-hour, we could look at the Ichimoku cloud. Ichimoku clouds on the 12-hour, I think this is going to be 71.75, same as the daily. You want to get above that and find some support. This cloud's starting to close up. Depending, if we come back down, it will continue to be red, but if we can get a pump, this could close up and turn into a green cloud, which could be, again, a possible bullish step in the right direction. On the 4-hour Ichimoku cloud, possibly losing the blue conversion line support. You might lose that, come back down. You have support all the way down here at 6,900. So, if we do get a bit of a pullback, 6,900 would be a support range to look at. Also, your stochastics are coming down on the 4-hour. So, it's usually the 1 hour, the 4 hour, the 12 hour, one at a time, depending on the power of the move, I guess. But so the 4 hours coming down, the 12 hour stoke looking to come down. If this ends up bouncing, then the daily, which was looking like it was crossing up, may continue to cross up. Okay. If you look at, we could look at the 1 hour just for the sake of it. The 1 hour is crossed up. So there you guys go. Real quick, looking at the 1 hour, do I see anything of notice? Nothing special. There's no volume here. So you saw that large spike in volume and then really no continuation there. This it was really looking like where the last video I was doing, this looked like, you had a nice pump in volume. This volume was a lot larger than what we had been seeing. It looked like a bull flag ascending triangle. We did have a pump to the upside, but there was no follow through, and then we just chopped around sideways. Ended up getting a nice pump, but no volume, and we're just chopping around sideways. Okay, so what was this pump here? Was it just a short squeeze? Was it, manipulation? Who knows? There was also a pump on the S&P futures at the same time, so it could have just been all markets getting a pump, but we've gone sideways since. Okay, so let's finish up with the 4 hour. On the 4 hour, we were looking at we could go to the Bollinger Bands. So kind of like the same as we saw with the Ichimoku cloud, we were losing that support there, potentially losing the middle BB support. We did close beneath it, and this candle 4 hour close in about 20 minutes, may close above the BB. We are chopping, but if you get rejected and close back beneath it again, coming in at 71.23, the bottom support level is at 69.86. Okay, moving averages. Moving averages, losing the blue 10 simple, but finding support above the yellow 21 EMA. The yellow 21 EMA at 7,100. So if you lose that, then, one step at a time. Next level, 7,020. The green 200 EMA at 69.75. Okay, so, but more importantly, on the 4 hour, it's been this 377 EMA, which is now at 72.94. We couldn't get a 4 hour candle close above it. So, I was talking about 7,400 would be the safe target to wait for a close using your horizontals. You want to get a 4 hour candle close above this body here. But if you wanted to be more aggressive, maybe a 4 hour candle close above 7,300. Where you have this 377 EMA. Also, you saw it held as resistance here. So if you break this resistance, that could lead to a little bit higher, just keeping in mind that 7,400 level as well. Okay, so that's that. Let's just do Heikin Ashi real quick, and I'll be done for the day. All right, so going to the Heikin Ashis, these are good for finding trends. The 4 hour is bearish, so still putting in bearish candles on the 4 hour Heikin Ashi. The 12 hour turning red. You're getting the first red one. So do we get a series of red to follow, or is it just one of these guys here? So we'll keep our eye on that. And the daily is still putting in green candles though. So it depends. The higher the time frame, generally the better, but you have to look at the lower time frames to kind of get that head start sometimes. So the daily is saying hold strong. The 12 hours hinting a possible pullback, and the 4 hour is in the process of that slight pullback, I would say. Our weekly also putting in green candles. Okay, so we've talked about this where sometimes this, are we here? That would be crazy. Look how many you get in a what's the word? I don't know. We'll just skip it. We'll no point in being tongue-tied too long. But yeah, you can see subsequent candles is the word I wanted. Just follow through there. So you saw another nice series of candles here as well. So, but overall, zooming out, looking at the regular candles, I've been talking about, we're at a critical level here. Just because this was a major support level back here, and we were looking at this as resistance for the past month. We've been looking at this as resistance. We're still banging up against it, so you know, you can see how 6,000 was support here, and we kept revisiting 6,000 until it finally broke down. Well, 7,300, we'll call it, has been resistance, and we keep coming at it, so maybe finally that level will break as well. All right. On that note, if we do break and, you know, hit 77, 8,000, where would be the next target to the upside? Because, you know, we may get rejected from 77 to 8,000 and then have a big pullback. But say we keep going up higher, always a possibility. There is a CME gap here, guys, between 8,400 or 8,300 all the way up to 9,100. We'll say 9,000. So potentially 9,000. You know, if you fill that CME gap there. Okay, so 20 minutes, perfect, short video. Hit that like if you haven't hit the like. If you haven't subscribed, hit the subscribe for me. Tick the bell for notifications, and I'll see you next time. Rolly roll!